AI investors are either shopping for bargains right now or bailing on some big names. Here to break down three bargain buys in AI that still have a strong future ahead is market beat analyst Gabriel Osorio Mazzilli. Gabriel, let's first talk about kind of the elephant in the room. Ever since the DeepSeek disruption came on Monday, a lot of investors have differing opinions on what the future of the AI market might look like.
Right, and DeepSeek did make a significant dent on the outlooks and the views for technology and how AI is going to be playing out for the next few years. Now, in my opinion, I think that making AI more efficient, more accessible, and lowering the cost of entry is actually going to be better and is going to be bullish for all these chip makers that are down today.
Let's dive into your opinion a little bit more because there's some I think who share it and others who are still feeling a little bit different about how much the DeepSeek news and how cheaply they were able to make their large language model. Do you think that there is that big change coming and will it change the demand for these chip makers especially?
Well, of course it's coming. It's like any other industry. When you look at the automotive industry, when cars increase their miles per gallon, that doesn't mean that car makers are going out of business. If anything, it broadens the market and the accessibility for more people to afford cars and therefore increase production demand and output. The same thing is going to happen for chip makers, for cloud computing companies, as the costs decrease for AI. And of course, that's going to be a competition now where every single other company is going to try to lower and lower and lower the cost.
If you share Gabriel's belief and you believe that a lot of these AI companies are going to see a turnaround, right now it looks like a great bargain buy time for investors. You have a list of three stocks for us, Gabriel, that are down right now ever since Monday, still struggling to gain more momentum back, but you believe are going to have a strong future ahead. So let's start with your first pick.
So my first pick is Oracle. And Oracle, as you know, is of course responsible for the infrastructure in behind the scenes. What that means is cloud computing, software, and the hosting that favors the training for these models, right? So as more AI models are developed, as more demand comes through the door, it is Oracle that's going to lead the way in hosting all of these computing needs and processing needs, which is why you saw it lead the way when the $500 billion investment was announced for the Stargate project in AI.
But could DeepSeek impact their plan at all?
I think it could, but in a positive way. Lowering cost. It's actually going to drive demand higher and accessibility. Then you see Oracle playing both sides of the field. While cost might harm some of the margins for the hardware makers, I think that the scalability and the low cost, high margin business model that Oracle has in the cloud computing business is going to benefit from any sort of demand increase in AI.
Well, let's look at the chart right now. Oracle, like many other stocks, took a big hit on Monday. Where are they at now, halfway through the week?
But right now, the stock trades at $161 a share, which is still within 80% of its 52-week high. And even though it took a pretty nasty hit over the past couple of days, it's still within bullish territory. And based on the current analyst price targets and the way that multiples are trading right now, I would be pretty confident in saying that the market still has a pretty bullish outlook for Oracle stock.
What's your second bargain AI stock pick that you still see a strong future ahead despite any disruptions?
Well, not only do I see it, but Wall Street sees it in advanced micro devices stock. The reason is AMD and its current CEO are looking to not only beat the current computing power and processing power that chips have today, but it's also trading at a significant discount from everybody else. If this DeepSeek scenario ends up happening, then you have the best risk to reward ratio in AMD stock. Wall Street knows it, we believe it, and the chart will show it eventually.
AMD is another chip maker. So this does kind of go along with your argument of just because the way AI makes these new large language models might be changing, these chips are still going to be in demand. Is that right?
You can simplify it looking at the automotive industry, right? Just because miles per gallon go up, it doesn't mean that car production will go down.
So let's look at the AMD stock chart right now. How much of a drop did it see on Monday?
After the DeepSeek news came out in the market and everything kind of sold off, AMD went from $122 by Friday's close down to $113 by Monday. That's a 9-point drop, by the way. And today, the stock trades at 51% of its 52-week high, but that didn't scare away any Wall Street analysts, as the consensus price target is still set at $173 a share. That's that's 51% upside. So I think a recovery is in the making.
It would be a bargain buy if what analysts say is true. If it does see that upside, getting in now seems like a good move for investors. Let's move on to your third and final pick in bargain AI stocks that still have a strong future ahead despite the DeepSeek disruption.
This one might be a bit controversial, but I picked Nvidia. And Nvidia was the largest drop on Monday after the DeepSeek news. I think it ended up dropping by 17% to end the day, but it still trades within 80% of its 52-week high. It's not nearly in bearish territory and it's not in bullish territory. It's in that sweet spot where investors can get into the wave of recovery should it come from the DeepSeek implications. Now, Wall Street analysts agree, and markets are readily paying a premium for this stock. Markets always overpay for a stock they believe will outperform peers, industries, and the entire market.
And it seems like your theory of just because it might be changing, chips are still going to be in demand would hold true for NVIDIA as well, that there would be even more demand for the chips that NVIDIA is providing.
Correct. And by the way, DeepSeek uses NVIDIA chips. So if anything, higher demand for DeepSeek's new models will equal higher demand for NVIDIA's chips as well.
It's a good point. Now, what if the opposite is true of all of these picks? What if the naysayers who say DeepSeek is completely changing everything and these chip makers are not going to make back the money they've invested in product development? Is that a possibility that some of these huge names that have been so strong for investors could actually start to decline even further than what we've seen this week?
That's a very good point, and everything's possible in this market. What I would say is for that to happen, you need people to stop buying laptops, phones, even cars need to stop making computers, right? If anything, I would say at the risk reward ratios that we have today for chip makers, that scenario happening doesn't really price in much more downside from today. I still stand by the fact that if you make technology more accessible, then more industries that need to develop technology, agriculture, construction, manufacturing, the technology implementation in those industries will definitely call for more chip making.
Some really great points today, Gabriel. Thank you so much for your time today. And if you're looking for other AI stocks that could be good investments still early on in the year, check out our latest free premium report on marketbeat.com on 7 AI stocks for beginners to really dive into. You can scan the QR code or check the link in the description of this video to get that free report on marketbeat.com. Thanks again for your time today. Join the conversation in the comments. We'd love to hear what you think about this big topic on all investors' minds right now. Thanks again for watching, and as always, happy investing.